Ever wonder what it takes to rebuild a mortgage business from scratch with no clients, no referral partners, just raw hustle and strategy? In this episode, I sit down with Greg Williamson, a longtime mortgage industry vet, my very first coach when I started the mortgage business many, many years ago. He recently exited a fintech in the mortgage space and has now decided that, hey, I'm going to rebuild a mortgage business from scratch. And he's using a tool called Ownwell. He calls it the Ownwell Math. And his whole goal is to build a 25,000 person database that he's going to market to, not his database of clients, but his referral partners. And he started a YouTube channel to basically document this. I think you're going to find this conversation really engaging, inspiring, and just see what's possible when you apply good strategy and hustle to the current market. Hey, I'm Scott Beckford. This is the Out of Mortgage Brokering Podcast. And every week, our whole goal is to bring you ideas, insights, and inspiration to help you scale your mortgage business. And I think this episode is definitely going to help you with that. Before we jump into that, I want to give a shout out to one of our sponsors, Ownwell. Ownwell is an amazing tool. Greg's going to talk about it today that allows you to engage with your database to create conversations that lead to clients and leads to leads. It creates a monthly report that has your clients' buying power and home equity in it. It's very slick. It has open rates of 60 to 80%. And that high open rate creates conversations that leads to deals. Check them out at ownwell.ca/Scott and check out this conversation with Greg. Hey, Greg, welcome back to the show.
Hey, Scott. I'm glad to be here. Excited to be a part of this. I'm coming off a summer cold, so I do sound like Alana Miles right now singing Black Velvet, but hey.
Yeah, you do have a bit more of a salty voice.
Yes,
sounds very sexy. You sound sexy.
Yeah. Okay, cool. Let's go with that. Maybe later in the show, we'll do a little karaoke.
You can do James Earl Jones. This is CNN. That's my, I don't know if I can go any lower than that. Okay. So tell me a little bit about yourself and what are you up to now? Because the last time we chatted, you were at your Lendesk. I mean, my first interaction with you was 18 years ago or something when I was got in the mortgage space and I hired you as a coach. I went and did some training with you, which was awesome. And you've done many different things in the industry over the years, most recently Lendesk, which you built and sold, or Finmo rather, and which got acquired. But now, what are you up to now?
Yeah, you're right. I mean, look, it's 32 years now. I'm in the business. I've done 5 different types of startups in that business and sold some, blew some up, learned a lot along the way. And recently it all started about a year ago or so. You ran an episode with Wally. How do you say his last? Ebieri?
Eliaberry, yeah.
Eliaberry, pardon me. Okay. Yeah. So, and I remember vividly, I was running on the treadmill listening to it and I was just like, wow. And it just really hit me with what a great idea. Like I knew a lot about HomeBot. Like when we were in our Finmo journey, we met the HomeBot founders. I always thought that was an amazing product. I always wanted to Carter and I were going to build it a few times, but competing priorities came in. I always loved it. And then when I heard that, I was starting to think about, the end was near for me in terms of my Lendesk journey. And I was starting to think about, well, what am I going to do next? So I left Lendesk in September last year, and then I just kind of chilled for a few months. And then in about April of this year, I started thinking about it before that, but I kind of hit the ground running in April. I wanted to start a new mortgage team, get back into the business. And I wanted to do it based on that, episode of I'm going to try to get 25,000 plus people into my Ownwell database and just that be the foundation of a mortgage business going forward. Yeah. And so that was it. And then when I got started on that, I got approached by Dan at Ownwell, and he was like, "Why don't we document this?" And I thought, what a great idea. And I loved the idea. I've always wanted to do something like that. Yeah. And so, I said, okay, yeah, here's the story. I'm starting over from scratch, no database, no deals, no pipeline. And I thought that would resonate with people. Sure, I had an advantage. I've been in the round of business. I know a lot of things. I've been coaching for years, but still, I was still starting where some people are. Yeah. And I wanted to film it and do every test, every win, every failure, every uncomfortable truth. And I wanted to do it something different than I'd done before, but I wanted to show up and just express who I really am and express what, my passion and what I'm doing it without an agenda that I'm trying to sell something. Like there's nothing for sale. There's no, it's not anything like that. It's just, here's me doing, going through the trials and tribulations. And, we even talk in one episode about the current rate challenges and what's going on with these unsustainable bank offers, especially on renewals. And so we broke that down. It's like, well, here's a test. Here's what we're going to do. Here's how I'm changing my sales pitch. Here's how I'm thinking about that. And so people are kind of seeing it real and live and what's happening. And we spent a lot of time also talking about the raw, vulnerable truths and the uncomfortable emotions and feelings that often come up when you're, a founder or, a solo entrepreneur and you're going through the grind. I mean, we talk about that too. And so, I just was, and I'm loving it. I'm really proud of the work, getting lots of great feedback on it. And frankly, it's just I just love it.
Yeah. I love that whole premise of what you're doing. And when I connected with Wally and saw what he was doing and looked under the hood, I thought, man, if I had to do this over again, that is the only way to build a business.
Oh man, I'm so glad you said that, because that's like a good shot in the arm, because I just really believe in it. I mean,
yeah, I believe, because everything else I feel like, and that's why you look at when the US went through their downturn, his business kept growing because he built a recession-proof business model. Most mortgage brokers in Canada and the US, we don't think that way. We just think we're transactional, and I do believe it is the business model of the future. And the great part is you have the skill there's other brokers that are trying to do it. They don't have your sales ability, your marketing skill, your ability to communicate. So there's a lot of things especially the first time, they need to be pretty good at this to be able to, because you're selling a new idea. Like, this is not like the idea of this HomeBot thing's been in the US for a long time. And I met the founders as well. And when I remember the first time I met them, I thought, man, when are you coming to Canada? And they're never. It's like, it's just not worth it. Right. And I think they sold that company for millions and like tens of millions of dollars.
I know.
And so they did really well with it. However, I knew that product or that offering would kill. And I think Ownwell is doing amazing things. So walk me through. So I will put links to the show. You've got some episodes you've created. You've got more coming. We'll make sure this episode has links to that show. Go watch them, is what I would tell anybody listening. Now, maybe just step back for a second. Explain to me your strategy of what you're doing. And then I'm going to get into I want to ask you some specific questions about that. So what is your specific strategy for getting to building this business from scratch?
Yeah, the long-term vision is I want to get to 25,000 people in a database. So the first thing I wanted to do is I got to test it. I want to test the math. So I created this thing called Ownwell Math. And I talk about that in episode 1 and I think 2 as well. But in episode 3, we actually do the results of the first test. And the Ownwell Math is, I just sort of went through it, thought about it. And it's I thought, if I get adopted mortgages, so people put their mortgage information into Ownwell, which is currently a challenge, although Ownwell is working really diligently on trying to, the HomeBot has an advantage because that information is more readily accessible. So in Canada, it's a lot more challenging. And so that is a challenge. And in fact, all of what you just said is true. All of this is a challenge. Trying to go to realtors and get them to want to adopt your database. On that note, the other thing was approaching realtors with the same old. I know you and I have talked a lot about this, where it's like, hey, I'm a really great mortgage broker. I smile a lot. I'll bring you donuts, and I'll be available 24/7. Give me some business. It's like, I just couldn't do it. I just couldn't go to realtors again with just humping legs and trying to get deals. I was just like, I'm going to come with something different. So I lead with value. So the first test I did in episode 2 was I actually went to 2 realtors cold. One of them I knew, but the other one I didn't know. And I just went and pitched Ownwell. I didn't even ask for business. And they loved it. And what I learned, when I actually first started that, I learned I was approaching it on what a great gift you could give to your past customers if you could help them discover opportunities for them to save money. That was the pitch. But what I learned afterwards was that's actually not the pitch. That what really is, a pitch is obviously nobody's buying anything that doesn't solve a problem. So the problem that I discovered is that realtors' databases are just as bad, and they struggle, I think, even more in being able to engage with their past customers. Because what can you talk about?
Right.
And so when
you're going to send them recipes and that stuff is sort of
with mortgage people, like when we're engaging with our past database, you could talk about the markets, you could talk about interest, it's better, but what are you going to talk about as a realtor? And so I discovered it's a challenge. And as markets are adjusting and realtors are starting to have to oh shit, things are not as good as I thought they were going to be. So this engagement was a real winning thing for me. And the bet was that if I start with value, and I always lead with, I'll invest. I'm right out of the gate. We just met. I'm starting this business partnership off where I'm going to pay for your clients to be in Ownwell for a year. So right out of the gate, I'm already making an investment in your business. That landed. And then, the end result is those realtors are now starting to give me deals with I didn't even ask for them. And so it was really interesting. Lead with value. So that happened. And then the test was, if I get, let's use easy math. If I get 1,000 people, I think it was like 30% of them will have, an immediate mortgage need. Probably 15% of them would have an immediate mortgage need. And of those, I'll close 25%. So it ends up being about a 3 to 4% total conversion rate on those. So that was the math I wanted to test, because I've also ran the back math to say, well, if that actually held, well, then I'm at, I can make this much gross commission and this much investment in the cost of Ownwell. It's a winning marketing strategy. So the first thing was to test that math on a small sample size. So we did 2 realtor databases. There ended up being about 400 people or so. And the first month we, hit basically close, in most of that open rates, click-through rates, and then, people registering their mortgage and then leads. So we ended up with the leads were a little bit under the math, but the deals, I ended up with 2 deals out of it. And if you added the realtor referrals that I got during that too, it was a winning strategy. So, and the reason I wanted to do the test was like, okay, if I can build this on a database of 400 and kind of test it for a few months, then when I go to, I've been approaching some very large enterprise type clients where they have massive databases.
They have thousands of clients. Yeah.
Yeah. So then I wanted to, before I have to invest, like, let's say I find somebody that's going to give me 10,000 people. Well, that's a pretty significant investment on Ownwell. Like, does the math hold? Like, is it going to pay off? And so the first few episodes are me just running through that.
You're thinking about this like a marketer, and not most mortgage people don't think like marketers think about, my friends who make money on Facebook ads, or they'll spend, if I can put in $10,000 and make out 30, I'm going to keep putting, I'm going to do that till the math stops working. But we don't think about that as mortgage. We're like, here's the problem I see with Ownwell. Fundamentally, is that brokers use it as a way to generate renewal conversations, and that's not the benefit of it. Like, I think plus you don't even win at renewals half the time. Like renewals, if it's a straight switch, you got no deal. You got to need a refi, or something has to change, or nothing's going to happen. And
actually, so I always say I want to get to the person before they get to the renewal. So if there's an opportunity for them to save money or refinance, or Ownwell is one of the great things about that is working with Ownwell is people are clicking the button that says that they can afford a larger home, which is driving a lead back to my realtor and me. But it's happening before we get to the renewal, because I agree that at renewal, my chances are really slim.
So what's interesting, I'm going to follow along on this, what you're doing, because I think this is, so if the math works just on, okay, this many people go in, this many people give me their mortgage info that I can't easily scrape or get, and I get this, A, leads, B, mortgage info, C, leads. But that also, the other part of this is like, with Wally, the thing that makes his so valuable is he's generating referrals for other partners. Right. It's not just realtor leads. There's people like, hey, you need a will. Financial planners, insurance. So have you thought about?
I have.
You layer that in. Once you layer that in, the thing becomes like it will print money.
That's a great idea. That's a great idea. I forgot about that part of the episode.
Yeah, like that part will add so much value.
Well, because then you become the
center. You become the center of the.
Then I can get the insurance brokers database. Then I can get the financial advisors database and the accountants database. And so I'm totally.
And then there's cross pollinate. I think it's over 35,000 or something he has now. And it's because he's getting these databases not just from real estate partners, but from these other wealth partners. And so once you apply that math, that 3% rule, which, that comes from Chet Holmes. He always said, at any given time, 3% of people, if there's 100 people in a room, 3% of people are buying what you're selling, whether it's tires, whether it's mortgages. And, and if the math works there, it's going to really work when you pull these other opportunities out.
Yeah. And so in the background, I was been nurturing these kind of larger enterprise opportunities. Some have not worked out. We talked about that in the show where it's like, hey, sometimes it doesn't work out. You got to pick yourself up and go at it again. And so, but I do have one that I think is going to turn out. And so it's a really big opportunity. And so now it's kind of like, well, to your point, I didn't want to start like that because I don't know if it's going to work. Like, so I wanted to test it. But like you said, if I get 25,000 people in a database in a year and get 3%, that's 750 deals. Like, that those 25.
It's hard to make a living on it, but you could it's hard to make a living, but you could do it if you had to.
Yeah. Even if I had like, low comp, I mean, that's 3.3 million. It'll cost me, $6 a year. So yeah, people are like, well, that's $150,000. I got to pay Ownwell to manage that. So that's not a small number. And that's not something you just want to jump in and all of a sudden I'm investing 150 grand and hope it works out. So I'm really spending the time to test it first.
Mm-hmm. Right. That's amazing.
And working with Ownwell, they were great because I know when I find out things like where Dan and I are, like we used to work together at Lendesk. So, I mean, we got a great relationship and he's wonderful and his team's great. Like they're jumping on things. Like he takes the results of my tests and he's like, these are the things we got to fix. And he's fixing them in real time. So that's actually also helping the industry a lot.
What do you, I love this idea of the Ownwell Math. And the thing I love about you, Greg, I learned this from you 18 years ago, is that you don't just come up with a process, you got to name it.
Oh yeah.
If you don't give it a name, it doesn't have anything to hold on to. And so the fact that you already call it the Ownwell Math, and then then it's like, it creates curiosity in my mind. So break down the Ownwell Math for me, just so that, but also I'm stepping aside from a conversation to give you kudos for creating a product around a process, which is something you've always been genius at.
Yeah. I mean, I've been fortunate. Like you said, I've always said that every idea I come up with has to have a name because it brings this unique thing that, like, for example, I call a debt consolidation a debt repositioning. It's just because it's unique to me. Or, if you're going to do a purchase plus improvement, no, it's a home renovation plan. Like it's just something different. And it's always been that way. But I think that it's also what I do with these enterprise clients too. I mean, like, turns out people with 100,000 people in their database have the same problem. How do I make money off the people that are in my database? How do I generate interest? How do I get engagement? If they're anywhere near the real estate space, this is a great fit. And that's the pitch. Yeah.
And then, so how was it? Because for you to go from, running a technology, being a broker, being a coach, all the other things that you've done, and running a technology company in the mortgage space, and now going back to pitching and having those conversations, like what's that been like?
Well, it's great for me. I mean,
you're good. You are good at it. So there's a bit of again, when Dan told me you're doing this, I'm like, oh man, this is fantastic, because you're the one guy I know who will figure out, like you said, you came in with an assumption about what you thought you were selling. And then you realize, no, that's actually not the problem I'm solving. You don't get that unless you actually do the work, right? That comes from, you can't get that in theory and thinking about it. You get it from doing the conversation, doing the pitch, and then realizing, I was off by a couple degrees and adjusting. Totally. How did it feel to do those again?
Yeah, it was great. I mean, I've always said that for me, it's kind of like, you alluded to this a little bit earlier. It's like whenever I did sales coaching or anything like that, or my own career, it really doesn't matter whether I'm selling tires or mortgage software or mortgage deals or whatever. The process is relatively the same. The pitch is relatively the same. So I mean, it was pretty easy for me to just kind of get back on top of it. But I'll give you a perfect example though. Like again, totally new thing. Like, I kind of saw it from a periphery, but this challenge that, I've been in the market long enough, so have you, where we go through these cycles where the banks are, offering these crazy rates, which in the past, it was mostly just about them trying to grab some market share. But this one feels different. Like it feels like when I was at Lendesk, I used to say to in audiences and stuff, I said, listen, the banks are spending money on figuring out, how to grade and how to think about their customers. So now they're starting to make pricing decisions based on the profitability of the entire relationship. And that's seems different. And so I'm in the deals, I'm working deals, and I'm finding out in real time that, I talked about one in my show where it's like a $1.2 million deal. Yes. And it was a guy who knew me. The deal's a lock, but lo and behold, he's a doctor, big deal, walks into his bank and gets prime -1. Like on an uninsurable deal. It's like, I can't even come close. So for me, it was like, okay, wow, this is a new realization. Like that one hit me right in the face. And so now it's like I spent an episode saying, okay, I need to rethink the way I'm approaching this. I need to rethink about the way I show up strategy sessions about pricing, and because I can no longer assume. I think mortgage brokers have spent, this is one of my core thesis right now in this build. I think mortgage brokers have spent good quality people that have been in the business for a long time. We've had a great run. And I think a lot of those people have a strategy, a hope and a prayer that I'll deliver my service. I'll deliver my whatever I do to say, this is the product that I advise you take, whatever it is, however they present that. But then it stops at I hope you don't Google. I hope you don't talk to your bank, because they already know that the pricing for a well-qualified client, you gotta be sharp. The information in the day of AI, I mean, how much are people using ChatGPT today to help them determine how they should choose their mortgage professional? And how easy is it for them to find the rate information? And the rates are really ultra competitive. So I needed to approach the pitch in a whole different way. I learned in real time. And so, this is an example of, just the stuff that's happening in real time. And then they're watching me solve that problem and try to come at another test. Okay, I'm going to change my discovery call. I'm going to add this. And then in my strategy session, I'm now hedging against the potential that they're going to shop. And I've got this rate.
So, okay, I'm going to ask specific here, just because, and again, people are going to go watch the episodes, but what's a shift you made in the discovery call to help mitigate this possibility of the loss on the back end or whatever? What are you doing different? I'm
thinking differently about the client that comes in. So who are they? And in the discovery call, I'm asking a lot more questions about finding out who they really are and what type of, if they're super well qualified. And now I bring in a conversation about, well, what is your general disposition? Are you a DIYer? Like, are you the type of person who self-directs your own investment strategies? Are you the type of person that, would build your own deck instead of getting somebody else? Or what's your general disposition? And see what they say. And they might say, well, yeah, actually that's what I do. And then I'll follow that up as, well, how are you going to do that in the mortgage strategy? Like, what's your intention? Like, just call it out. Like, what are we going to do? Are you going to go and shop around?
Yeah.
And so if that's what's going to happen, okay, fine. I'm going to have a different approach. But they might say, no, like I just did one and I did it in episode 4, but well-qualified client. And we did that. And she said, no, I super value advice. I think that it's important. The realtor that sent me to you is like, he thinks you're great. So it was like, great answer. But I'm sure they're not all going to be like that. But I still, even after that though, I can no longer go into the rest of the sales process assuming that she's never going to talk to her bank because she's super well qualified, going to get better rates. I got to head this off at the pass. So at the strategy session, I brought in one of my cards that I use in my software. I use Compare My Offers. I will already bring in what a potential bought down mortgage would look like rate wise, to keep in the realm of where I think the bought down rates are at. Listen, you probably know this about me, but that would have been heresy for me in previous versions because I would never want to buy down rates. I want to sell and maximize my comp, but I got to go with the realities of the market. Yeah. So it's not that I'm pushing or I want to sell a bought down rate, but I want to at least let them know that I've explored that. And particularly if it's at her bank. So she had to bank at TD. So I show the TD card, here's the bought down rate. And so I already had that off. Like, you don't have to do that. I can do that if you want that. But here's what, based on
some other options and why.
Well, in her case, it's always case specific, but this is why you got to think, I think strategically. In her case, it was like, she's a single woman, but had, buying a condo, but it's, she was in the years where she even said it's possible. Cause I asked her things like, how long do you think you're going to stay here? Because I want to open up the potential that she might break this mortgage inside the 5 years. And then, I'll give you one, talk about names again. I mean, I'm bringing this strategy back, bringing sexy back. It's like a lot of times I bring up some stuff I'd done years ago, but, in previous rate cycles, when it looks like fixed rates are on the rise, which I think that's what we're looking at, then I have a program I call No Bank Penalties. So I've modeled the math on it.
Weird. You put a product name around you put a product around a process.
Yeah.
I mean, right? Like if you're listening to this, you need to do, this is just marketing 101.
Yeah. It's like, so no bank penalties. Like, what the heck is that? And so in the two cards, I'm like, well, here's TD. Here's a low roll rate you could have, but it's a restricted mortgage and we grade it as a D. Well, why did you do that? Well, look at the penalty. The potential penalty if you break this mortgage is, in her case, it was like $7,000. If you go with this lender here, yes, the rate is 20 basis points higher. And then the compare my offer software can show what the difference that is in the principal balance of the mortgage, which in her case, it was like $1,500, I think. So it's like for $1,500, you could take this mortgage, and this mortgage, if you choose that one, I'll bring in my no bank penalties. And so that means if you break this mortgage sometime in the next 5 years, I'll cover the penalty as long as you do your next mortgage with me. So all the listeners out there going, oh, are you crazy? What's going on? But I'm like, I've modeled this math. Like if I did, 50 of those.
I've done this before too. Yeah.
If I did 50 of those type of deals, and I stood a chance of not winning that deal if she ever went somewhere else. I didn't head this off. Then I lose everything. But if I win most of those deals because of that, now in this case, it did actually work out. She said, no, I want that one. So full comp, good rate for her. So what's the potential downside for me is that if she moves up in the future, I'm guaranteed I get the deal. So yes, that's an effect to buy down on the second deal. But I live in the now. I want to get the deal today. And then in the future, if I get 50 of those, how many of those people are actually going to need to exercise the no bank penalties? Very few in my experience. But enough that if you model out the commission earnings on the deals you otherwise would have lost. You mentioned earlier about renewals. Great strategy at renewals too. Like I can't compete, but if I can actually give you a 10, 15 basis points higher, which doesn't affect much on your principal balance, but protect you and give you flexibility going into the future, is that worth something to you? A lot of people say yes.
Yeah. Yeah, that's clever. And it's kind of like in what I've taken coaching on selling, different products. When you offer the ability for people to get a refund, I remember I was listening, I think it was Alex Ramosi, I think it was. He was saying how somebody was complaining, somebody said, "Oh my gosh, look at all those refunds." And he's like, "Yeah, but look at all the sales."
Exactly.
It was like so the refund, let's say it was 10% refund rate but it was like, yeah, but we sold 200% more because we had the ability for refunds. And people get too emotional when it's just math. It's at the end of the day.
Totally. It always is math. Actually,
and you said that to me years ago. You said to me, no one does the math.
I was just going to tell you.
You told me. That's what you say. You said this was, I remember that.
Be the title of my first book.
My book would be No One Does the Math. And that's absolutely the truth.
And it just models out. Like, it's just like, I've heard lots of mortgage brokers, good guys who've had great businesses are getting crushed because they keep trying to sell their full comp deals. And then they get mad. In the 11th hour, the customer says, "Oh, by the way, I walked into my bank and they gave me like 404 and you're giving me 434.
And they're going to cut my grass and shovel my snow and watch my kids twice a week."
It's over. You can't wait. In the 11th hour, what are you going to do now? And so I want to head that off over here. So again, it's a test. I mean, I'm going to find out if it works. But I think it does. The math works.
It will work enough that it will. I think it's. Brilliant.
I know that I'll win deals that I otherwise wouldn't have. In this case, the lady, I was able to compel her. She didn't actually go. I mean, the deal's not closed yet, so who knows? But I had one just before her, though. Again, classic, like all of us have had, where everything's going smoothly and everything's great, and then all of a sudden I get the call that says, "Yeah, my bank gave me this," and now I'm dead. So I just want to head that off. I just want to win it right here, be done with it. I've covered all your objections. I've covered all the risks. And people love the idea of getting flexibility. And so even in that case, if I end up with, I modeled this and like, okay, her mortgage, I think the commission was going to be 5,000 on full comp. If she moves up, because presumably if she moves again and finds a partner and she wants to buy a house together, they go into like a $700,000 house. The mortgage goes up a couple $100,000. I make about a $7,500 commission, got to cover the $3,400 penalty. So I make $4-ish grand plus the original $6 I just made. I made $10,000 in 2 deals, or $0 if I just would have lost it right out of the gate because she's a well-qualified client that somebody gave her a better rate.
Yeah, I think that's brilliant. And you're playing the long. I always say good mortgage brokers are like golfers. You're always thinking about the next shot. Like you're not just thinking the shot you're in. It's like, where do I want the ball to be for the next shot? That's what good golfers do. I've never been a very good golfer, but I know that's what they do. Because then they're like, I'm going to put the ball here because I'm really good with that club. So I can drop it right on the green so that I can then on this part of the green, because then I can hit where I want to hit from. And that's why they play well. And good mortgage brokers have to do the same.
Yeah, and in the last build when I was doing active mortgage, I used that program very effectively. It was great because they also, in a rising interest rate environment, the penalties are going to be interest rate differentials. Or, pardon me, 3 months interest, not interest rate differentials. So it's minimizes my risk.
Yeah, that's brilliant. Okay, man. Well, hey, is there? I think I'm excited. I'm going to have to tune in. I know that we had chatted about this before. I haven't seen it. I'm going to go check it out. Is there anything I didn't ask you about that I should have asked?
Yeah. There's another part of this series that is important to me. Okay. I wanted to approach it too from express, who I really am, and so and share vulnerable truths about what it's like to grind and the emotions and one of the core themes is really about in this test. Like I have 2 other businesses that I operate and I work in, and I have this, but I'm building this in and protecting my whole life. Like I'm not. Working through like grind. It's a startup. I got to, it's too easy to fall into the trap of do more, do harder, go harder. And I'm just like, no, you can, if I prioritize, buy back my time, Dan Martell's book, and I do all of those things, I can easily operate a great business. I can build a great business, but I cannot, take the other areas of my life. I went through that. I did that. I blew up my business. I blew up my life, all of that. My health was terrible in previous builds. And I'm like, I'm going to try to do this in a different way. And so part of the episode arc is actually sharing some of those emotions and those vulnerabilities that I think everybody's feeling. But I want to bring it out into the light and talk about it.
Mm-hmm. Yeah, I love it. I think it's fantastic. And kudos for doing it. Thanks for sharing your insights. And I know if there's anybody that will figure out how to turn that into a killer business, it'll be you. I would love to have done this, but I'm in the middle of my own build, brother. I'm having fun. I'm enjoying it, and it's so much fun. But it's like anything. I've said a friend I've known for 15 years is like, I've never seen you this focused before. Like every time I saw you, you always had some new idea. He said it's been many years, and you have not. There's no new idea. It's just the same. You're doing the same thing over and over again, which has been a struggle for me up until. But I do believe I found my thing. But it is exciting to see you flex into this new thing and build from scratch. Because I see the mortgage business. There's so much opportunity, but you got to do it different. You can't do what you used to do because it won't work. Exactly. It will not work, or it will work so intermittently that it's not. I don't know if the juice is worth the squeeze.
Yeah, I mean, you know what? Watching you go, and I'm from afar, but watching you go through this build that you've done, I actually think you've learned a lot of those things that I'm talking about. Like I think now prioritize other areas of your life that maybe in the past you didn't. And
I have hobbies. I love work, but I also have stuff outside of work that I enjoy, and I make sure that I carve that out so that I can be the best version of me and I think also with you, it's the same for me. Like I went from a out of shape, fat ass, like terrible health to I made that a priority in my life. And now it's like, it'll never change. Like I'm getting to the age where I'm like, I look into, 20 years from now, be 77. I don't want to be like some of those people I see who are sickly and challenged and really, and so it's like health is really important. So I focus on that. I don't miss my training. If work comes in the way, I still got to get the training in. I got to get my health. And I've seen you do that as well. It's like, it's got to protect the vessel. You do. Yeah. Like my buddy Nate says, there's no wealth. There's no wealth without health. You got to have your health, and because you could have all the money in the bank, and tomorrow you get a call with a diagnosis, and none of it's going to matter.
Yeah, how many entrepreneurs do we know where they built great businesses? It looks awesome, but they blew up their marriage, or their kids they have no relationship with their kids, or they got other challenges. They got a bunch of addictions that are haunting them. It's like, okay, great, yeah, you got a great business, but look at this. Like I want to do it there. I want to have a great business, but also just prioritizing other areas of my life.
Yeah. Amazing. Well, awesome, Greg. Good chatting with you, brother. And we'll have to get you back periodically to check in. I want to see when you get your database bigger, we'll come back and be like, what have you learned now? We'll do like a Where's Waldo episode every so often.
Yeah, I like it. Yeah, anytime. Thank you.
Okay, thanks, brother. Hey, thanks again for listening, and hopefully you were inspired by this conversation. Go check out Greg's YouTube channel. He's been documenting his journey, what he's learning, what's working, what's not. And he is one of these guys. And when I saw Ownwell, just as a side note here, when I first, Ownwell, how I got stumbled into this is that many years ago, I talked to the founder of a company called HomeBot in the US. And I thought, man, this tool is amazing. I would love to see something like this in Canada. And I talked to the CEO, and it didn't, at the time, he didn't have any plans to come to Canada. They built that into a multi-million dollar business. It's massive now in the US. And when Dan from Ownwell reached out to me and said, hey, look what we're doing. We're doing this thing. I thought, oh my gosh, finally somebody's doing this, which is why I love this product. And because I'd seen it probably 6 or 7 years ago that it needed to be here. And so Greg, as one of the smartest guys in terms of sales and marketing, he is, if there's anybody that's going to figure out how to harness that technology into the Canadian market, it'll be Greg. So I encourage you to go check out what he's doing. Have a look, listen to that, and check out Ownwell. It's a fantastic tool. If I were building a business, if I was building my mortgage business today, I would absolutely build that at the cornerstone and use it to generate leads for me and my referral partners, similar to what Wally Library does. I've had him on my podcast in the past. He's coming up again soon. We're going to do an update show with him, but he markets to 30-some thousand clients a month, even though he only has 4,000 clients, but he's marketing to them in order to generate deals for himself and his referral partners. I think it is the smartest business model. It's recession proof, and it's grown even in the downtimes throughout the US market, as Wally has proven. All that to say, I'm Scott Beckford. Hopefully you found this inspiring. And the last thing I'm going to ask you is, if you're not on my email list, you're going to want to get on it. Each week I create an email called the 321 email, 3 things to check out, 2 AI tools, prompts from me, and then 1 idea. I spend a lot of time on it. We got a fantastic response rate on it, as well as open rate and click rate. If you want to get the most useful email for mortgage brokers, click on this episode. You can find a link. Also, you can find me on social. Click on my link tree. You'll see it there. And hopefully I see you in that email. And thanks again for listening. As I always say, there's no problem in your mortgage business someone else hasn't already solved. Your problem is who's got the answer. This podcast is designed to provide some of those answers. Thanks for listening. And I will see you on the next episode, and maybe in your inbox if you're not on my list yet.